Today, we're diving into an in-depth analysis of Sofi technologies to determine the best action in the current market environment. The market has been through a very volatile episode lately, and there are reasons to believe that Sofi will be one of the few winners in the peaking and subsequent bottoming of the equities. Trading through the market currents is not something easy to navigate with so many conflicting bullish and bearish tendencies simultaneously. Taking a look at Sofi's recent price action, we've witnessed quite a significant volatility ride. The stock surged from $5 to $11, showing immense promise. However, just as quickly, it retraced back to $8. This is the first time that Sofi stock managed to leave the bearish trend as seen previously, given the changing company fundamentals of the company, as well as the changing market sentiment towards this fintech company that tries to take part in the traditional banking industry. In terms of technical analysis, Sofi's chart reveals a mix of highs and lows. Its historical price pattern showcases volatility and an inability to sustain gains. The recent fall to $8 might be indicative of resistance around the $10 mark. For additional insight, we can also pay attention to moving averages, support, and resistance levels. Recently, Sofi underwent a significant business shift, moving away from being primarily a student loan provider, which impacted its earnings and market sentiment. The market crash of 2022 hit non-profitable stocks like Sofi hard, and the broader fintech sector faced challenges, affecting Sofi's performance. This is also something that they had to carry out regardless, since the student loan is a hot topic, of which the financing options, liquidity and profitability may be affected by external factors. Even though this was Sofi's initial goldmine, it proved to be something to divest from both from a financial and public relations perspective, as the public opinion is clearly in favor of reducing the students' burden on reimbursing their student loans. Companies like Sofi have been at the forefront of reshaping traditional banking and investing. The confluence of rising interest rates, increasing inflation, the specter of recession, escalating geopolitical uncertainties, and the ascension of cryptocurrencies has thrown a complex web of challenges and opportunities at these innovative firms. As these forces intertwine, their impact on the future outlook of fintech companies, particularly Sofi, as well as their share prices, becomes a subject of scrutiny and speculation. The trajectory of interest rates can significantly influence the operational dynamics of fintech companies. A rise in interest rates can increase borrowing costs, potentially dampening consumer demand for loans. This could have a notable impact on platforms like Sofi, which are deeply integrated into the lending ecosystem. On the flip side, higher interest rates can also lead to better interest income for these companies' savings and investment products, potentially bolstering their revenue streams. Sofi's ability to adapt its lending strategies, capitalize on potential investment income, and recalibrate its pricing models will be crucial in determining how successfully it navigates this landscape. As inflation rises, consumer purchasing power diminishes, and the cost of doing business increases. Fintech firms like Sofi must anticipate how inflation might affect their users' financial behaviors. Inflation can drive up the costs of customer acquisition, platform maintenance, and employee compensation. Balancing these cost pressures while delivering value to customers will be a challenging tightrope for companies like Sofi. Inflation can also influence investment decisions. Traditional assets may lose their appeal, leading investors to seek alternatives. In this scenario, fintech platforms could see increased interest in their investment products as people seek to preserve and grow their wealth. The looming possibility of a recession adds yet another layer of complexity. During economic downturns, consumers tend to tighten their belts, leading to reduced spending and borrowing. Fintech firms that depend heavily on consumer loans and transaction volumes may face a challenging environment. History has shown that crises can also catalyze innovation. Fintech companies can seize the opportunity to introduce new products that address emerging pain points. For instance, during a recession, demand for personalized financial advice and budgeting tools might surge, playing to the strengths of platforms like Sofi. Geopolitical tensions and uncertainties can disrupt global markets and impact fintech firms' operations, especially those with international exposure. Fluctuations in exchange rates, trade restrictions, and regulatory changes can create headwinds for expansion strategies. On the other hand, these uncertainties might also drive demand for fintech solutions that offer cross-border transactions, currency hedging, and alternative investment opportunities. Companies that can navigate the regulatory maze and provide seamless cross-border services stand to gain an edge. The rise of cryptocurrencies has injected a new dimension of disruption and opportunity into the fintech landscape. Firms like Sofi must decide how to engage with this nascent yet transformative sector. Integrating cryptocurrencies into their offerings can attract a new cohort of tech-savvy customers. However, it also exposes these firms to the inherent volatility and regulatory ambiguities associated with the crypto market. The challenge lies in striking a balance between innovation and risk management. The adoption of blockchain technology could streamline processes, enhance security, and improve transparency, while simultaneously reducing operational costs. These factors undoubtedly have repercussions in the stock market. Share prices of fintech companies, including Sofi, are likely to experience volatility as investors recalibrate their expectations based on changing economic and market conditions. Confidence in these firms' ability to weather the storm and emerge stronger will play a pivotal role in determining their valuation. The future outlook for fintech companies like Sofi is a mosaic of challenges and opportunities shaped by rising interest rates, inflation, recession fears, geopolitical tensions, and the ascension of cryptocurrencies. Success will hinge on their adaptability, innovation, and agility in navigating these shifting tides. The path forward requires striking a delicate balance between maintaining profitability and delivering value to the customer base. While uncertainty prevails, the resilience and strategic choices of fintech firms will ultimately define their trajectory in this complex landscape. If you're an investor who missed out on buying Sofi during its lows and believe in its long-term potential, now could be a good time to buy. The prospect of profitability in Q4 2023 and the potential influx of stable shareholders might offer a positive outlook. If you're bullish on Sofi's future growth, consider dollar-cost averaging to gradually build your position. For existing shareholders who have already built their positions, holding might be a wise choice. If you're confident in Sofi's ability to weather short-term volatility and believe it will eventually rebound, maintaining your position could be prudent. If you've already seen substantial gains and have concerns about Sofi's ability to overcome its historical pattern of volatility, taking profits might be a suitable option. Evaluating your portfolio's diversification and risk exposure is essential when making this decision. While the company has faced hurdles, including market crashes and business transitions, its potential profitability and shift in focus could drive growth. Consider your investment strategy, risk tolerance, and long-term goals before making any decisions.